Welcome back, everyone. In the entire history of the United States, only 2 companies have gone to mass scale on automobiles and not declared bankruptcy. Can you name those 2? In fact, it is Ford and Tesla. So anyway, that's going to be the focus of today's video, is whether or not Rivian will be among those to reach mass scale without declaring bankruptcy. So that's the focus here, is can Rivian survive, essentially. What is the viability of Rivian? So this is obviously on the eve of their Q3 earnings report, which they just released. So we got updated numbers, and we're gonna go through those really quick. But I'm gonna focus on this one key topic. Again, can they survive? So anyway, Rivian stock is up after hours 3% to $10.36 per share. But yeah, if you look back at the 1-year chart, yeah, you can see it there. But yeah, I want to focus on that one question. By the way, Shemao, who's both there and also down there, says to like and subscribe. So yeah, what's going on with Rivian? What's going on with Rivian is that, number one, they actually slashed their production forecast in Q3, and this will also affect Q4 of this year. They said it's a supply shortage on like an engine component, a parts shortage. So yeah, Rivian said the lower production target, down from 57,000 units this year to between 47,000 and 49,000, is due to a production disruption. Rivian produced 13,157 vehicles at its manufacturing facility and delivered 10,018 vehicles during the third quarter. And this was released October 4th. Okay, so what's going on here is, well, basically you just read it. My main question here actually is this. I'm just wondering if there's a demand issue, because this actually occurred. It says right here, the supply shortage impact began in Q3, has become more acute in recent weeks, and continues. So it's continuing into Q4, because obviously this came out October 4th. So that's 4 days into Q4, it's continuing. They don't say how long it's going to continue, but it's still continuing. But anyway, the question then becomes this. If there's a production shortage, why are deliveries so low? They produced 3,000 more cars than they delivered in this quarter. Where did these 3,000 cars go? Why couldn't they also deliver these 3,000 cars? Is there a demand issue? That's a question I have. So yeah, let's move on. What else is new? Well, this isn't new, but Volkswagen is investing $5 billion into Rivian, plus a joint venture between VW and Rivian. They've already given Rivian $1 billion of the $5 billion. Of the $4 billion remaining, some of it's going to go into the joint venture, some of it will be going to Rivian. We don't know the breakup of that just yet. By the way, that $1 billion is going to be realized and converted into shares in December 1st, 2024. So if you look at the market cap, it's 10%. So you're about to see a 10% dilution on your Rivian shares because of that $1 billion. But again, there's $4 billion remaining. Okay, so yeah. Going back to my topic at hand, here's their Q3 shareholder letter. So what they're doing is they reaffirmed their Q 2024 outlook of 50,500 to 52,000. That's the revised outlook on October 4th. This is not the outlook from the previous quarter. The previous quarter's outlook was 57,000. It's not listed here. And it also says they are on track for positive gross profit for the fourth quarter of 2024. So let's dig into that. This is the big thing, because what happened was Rivian actually did a factory upgrades in Q2. So Q2, they did factory upgrades. In Q3, they had a supply shortage. So right now, everything that they should be producing should be with these factory upgrades. And the primary goal of these upgrades was to reduce the cost per vehicle. They're basically realigning the suppliers and restructuring the internals of the vehicle to make them cheaper to produce. That's the reason behind the upgrades. And it also increases the capacity per line. They're able to produce about 33% more vehicles per line at a faster rate. So that's a key thing. and very important for them. Okay, so yeah, getting back to it, path to profitability. And this is on the current earnings report. It says, our long-term success and ability to make an impact will ultimately be determined by our ability to operate profitably and generate cash flow. Over the past few years, we've taken significant steps to reduce our capital expenditures and overhead costs. This includes our decision to bring the first line of R2 production to normal. So again, they've postponed the Georgia plant, and they're going to focus and build the R2 in their current normal facility. And other organizational changes we have made. In addition, we remain focused on generating positive gross margins through improved unit economics on our vehicle platforms. Sorry, the cat was having a little seizure. We expect to generate modest positive gross margin in the fourth quarter of 2024, supported by the following key drivers. Revenue per unit. We anticipate an increase in revenue per unit delivered, mainly driven by the increase in non-vehicle revenues, such as the sale of regulatory credits, vehicle services, remarketing, software, and other services. In addition, we anticipate the average selling price per vehicle to increase due to the higher mix of the second-generation R1 vehicles and more premium variants. Variable costs. This is the factory upgrades. And then fixed and semi-fixed costs, again, the factory upgrades. And also lower costs due to inventory reductions. So anyway, moving forward, 2024 outlook. We've read these already. And then it says the lower production outlook for 2024 has a negative impact on our profitability for 2024 due to our limited ability to leverage the fixed costs of our production facility. Because of this, we are revising our annual adjusted EBITDA guidance to between a negative $2.825 billion loss to a negative $2.875 billion loss. That's primarily the purpose of this video, is to discuss the viability of Rivian and can they make it. See, the thing is, Rivian needs to make it to the scale of the R2 because the R2 is going to start production in 2026. So not only does Rivian have to make it to 2026, they actually have to have the funds to scale the R2 in 2026, up to itself, the R2 becoming significantly profitable. That's the goal right now. That's the near-term goal for Rivian. Near to mid-term. So yeah, gross profit, we generated negative gross profit of $392 million off of sales revenues of $874 million. In the third quarter of 2024, as compared to negative $477 million in the third quarter of 2023. It is warm in here. Fun this. Okay, so yeah, gross profit losses decreased year over year, primarily due to lower delivery volumes. So that's not really how you want to do this. You wanted to eliminate a negative gross profit by scaling, not by cutting your sales. But in this case, they kind of had to because of the part shortage. Gross profit losses per unit increased primarily due to an increase in cost of revenue efficiency initiatives and smaller, that's the factory upgrades, and smaller reduction of inventory write-downs and losses of purchase commitments. Cost of revenues in the third quarter included $37 million, which is one time. They don't expect that to continue. So subtract the $37 million from the $392 million, you end up with like $350 million in that range. $355 million in gross loss. Okay, so let's go down. Okay, so what are we looking at here? What we are looking at here is, well, it's self-explanatory, but what we're focusing on is gross margin and gross profit. So gross profit last year was negative $477 million. That improved to negative $392 million. Again, if you subtract out the one-time costs, it's about negative $355 million. So without taking that out, though, the gross margin is at negative 45%. So Rivian's got a tall task ahead in just this quarter, very short time. They have just 3 months to improve their gross margins by 45%. Can they achieve it? I don't think so, but we'll see. They can prove me wrong. Prove me wrong. Prove me wrong. Okay, so anyway, if they can though, they haven't improved their gross margins, their gross profit by $392 million. So keep that in mind. We're going to use that number going forward. So it also says, I talk too fast sometimes, their free cash flow non-GAAP this last quarter was negative $1.153 billion. So that's the thing, is Rivian has a negative cash flow of $1.153 billion. They have a, where's the cash flow? Right here. They have cash flows of, let's actually go to the assets balance sheet. They have cash and equivalents of about $6.6 billion. Okay, so they have $6.6 billion in cash and equivalents, about $1 billion plus in a credit line that they can tap into. So they got about $8 billion in cash, plus a little bit more money coming in from VW. So they got about $8 billion in cash, and they're losing about $1 billion per quarter. So let's take it that $1 billion per quarter, actually, and let's actually switch this to the whole display. Calculator time. It's calculator time. Put me in there. So you have to put that here. Put me over there. Okay, so yeah, let's make this easier for everybody. Yes, I'm using Windows. Okay, so let's do some math. It's quick, easy math. So let's say they're able to just completely become gross profitable. So in Q4, so let's take the negative, all right, let's just go 1153. Subtract out the 300, subtract out the $392 million, they would end up with $761 million negative. So let's flip that around. Okay, so continuing into Q4, assuming everything else stays the same, they would have a negative free cash flow of negative $761 million. If you multiply that by 4, let's say that's a yearly number, that's $3 billion per year at the current rate. Obviously, revenues are going to improve and other things will improve, so this number should be better. But at the current run rate, they're at a negative $3 billion run rate. So they would run out of cash in about 2 years at this current run rate. And this is prior to the R2 even starting to ramp. So in my opinion, Rivian's going to have to substantially improve their operating performance. Because again, this is including the becoming gross margin positive next quarter, or break even. This is including break even gross margin next quarter. And this is still a negative free cash flow, $3 billion per year. And they've only got about $6 billion in cash. Again, about $8 billion if you include loan reserves. So they got about 2.5 years. And then they got to scale R2. It's going to cost billions of dollars to scale the R2 vehicle line. They got to set up the new lines, the manufacturing lines, supplies, everything else. And that's supposed to be a mass market vehicle coming in at a much cheaper price than their current vehicles. And that itself will take 1 year to scale at a huge cost. So I think Rivian's going to have to take out either a massive loan or more share dilution in order to fund themselves through the R2 ramp. So can Rivian survive? I don't know. We're going to need a few more quarters of results. I need to see the Q4 results. I need to see them become gross margin positive in Q4. If they can become gross margin positive in Q4, that would be a huge bonus to them, and it'd be a huge congratulations, because right now the gross margins are terrible. So I will reassess next quarter. But what do you think? What do you think about Rivian's viability? What do you think about the current trajectory? Will you purchase the R2 when it comes out? Let me know in the comments. So yeah, with that said, thank you for watching, and I'll see you in the next one.